I wish we had trading opportunities like this every day. In this video, 8 chart divergences pointing to a market drop. Guess when? On the day when everyone turns bullish beyond any reasonable doubt. The market is going nowhere but higher. Why? Because we've got the coronavirus vaccine. Multiple companies making announcements yesterday. The stocks are flying to the moon. Guys, just as the last bear froze in a towel, you're looking at your screen pre-market today on April 17th. It's just when you thought that the market can go no higher. There's no freaking way possible this market could be moving even higher. And sure thing, it does. And you're looking at your screen right now thinking, fuck it, I'm buying calls. And just as you're doing that, the market is about to reverse. So being the short seller, guys, you leave for opportunities like today. And there's a couple of ingredients that goes into successful short selling, where you're short selling stocks, or even more so when you're short selling stocks or futures for utilizing put options. Because it's not just about getting the direction right, but it's about getting the key ingredients such as the cost of your options, okay, at the best possible price, so you can realize these 400, 500, 1,000% returns that we've shown you in multiple videos on this channel, guys. So as you're looking at your screen saying, I'm buying calls, okay, the savvy short selling mentality, plus a few charts I'm going to reveal to you. I don't have time to talk about everything because things are going to be wild today. I need to jump and talk to a bunch of VIP guys. They're ready to rock and roll, make hundreds of thousands of dollars today. But I will do my best to share with you in this video as many quick little secrets as possible so you can be on the right side of the market over the course of the next 72 hours. So a mighty bear reversal nobody will believe could actually take place by the end of the day today on April 17th, 2020. So as the crazy announcements are coming out after hours yesterday, GILD is the ticker for Gilead Pharmaceuticals, announcing that they are very successful with the early stages of trial for the coronavirus vaccine. At the same time, minutes later, Moderna, ticker mRNA, guys, flying from $40 to $50 within minutes. Okay, and some positive news with its vaccine for the coronavirus. Guys, it seems like everything that the bulls have been expecting is now perfectly playing out. But on the other note, it's exactly those days like today that could be pointing to the last day higher, just as it looks like everything is perfect for the bulls. Perfectly lines up with multiple divergences, which I'm going to do my best to reveal to you some of them in the next 5 minutes here. I'm not going to be able to reveal all of them to you. But as all the stocks are rocketing higher, guys, notice that they're going higher. In relation to the prior volume, they're going higher today on very, very low volume. And that's the first sign that makes you say, or should make you say, well, wait, are we really rocketing to the moon? Or perhaps we are already at the moon. So looking at some of these charts, clearly Amazon is on the moon already, hitting 24.61. Man, what a great trade it was. Boom, we shorted it. It dropped $108 within 5 minutes, guys. Unbelievable trade right there. Now forget about Amazon, okay? If talking about the moon, okay, this one right here is sitting at the tallest building on the moon. If they had like the tallest skyscraper at the moon, hypothetically, this one would be right at the top floor of that skyscraper, and that would be Tesla. Went from 351 all the way to 791. Okay, talking about the moon, it apparently looks like we are already sitting at the moon, including the 20-day chart of S&P 500. 20-day, 33%, almost 3%, 32.7% run higher all the way from the lows 20 days ago of 2174, which we called the bottom right here, guys. 13 markets move formula. Man, I remember talking to some people. They told me I was crazy. They said, Lil, you want to buy calls right here? I said, hell yeah, we're buying calls. Okay? With accurately pointing to the pullbacks right here and right here, guys. And this is the ultimate short seller opportunity. We actually hit our level. We've been talking in the last few videos of 28.84. Actually, we got to 28.85, just the point off right here. But the point is, we've been pretty much going uninterrupted for 20 days when these crazy moves higher happen within a very limited amount of time. And at this point, we're not even talking about a month. This is not even a full month, guys. This is 20 days. Okay? This is what's about to happen next. When you put this rally in the context of where we have traveled from, we're only about a little over 10% from all the highs. And considering all the stuff that has transpired, considering the 22 million of jobs that have been lost, considering multi different variations of the things that we have talked about, okay, it appears that nobody is paying attention to them and everything, okay, has been already forgotten. Market has a very short-term memory. But let me show you one chart that will remind you and freshen up your memory about what is likely to happen next based on what the history is actually pointing to, and that is the history of the chart. So I'm about to reveal to you this one crazy chart which is going to tell you exactly what's going to happen next. But for now, while we're looking at this one, look at this. We're just against that blue line in a situation where Death Cross was recently formed. Guys, this is a recipe for a disaster. Despite of this bullish crazy run, the reversal to the bear side will take place today on Monday or Tuesday. Within the next 72 hours, there's going to be a wild reversal to the downside, okay? So target this area about 28.84, guys. That's the area to go short, okay? Because the probability of a move lower is significant at this point. We're making a death hook on the MACD. We got accumulation distributions at the max. Everybody that have been buying due to the Federal Reserve. The Federal Reserve itself has been buying. Now that the good news is out of the bag, people are going to start taking profits, okay? These crazy hedge funds that lost, including the Ray Dalio fund, okay, 40% last month, okay? Now that they're cashing in on this 30% run, they're sitting on this paper gains. You don't think they're going to lock some of these gains? Absolutely they will. Now, does this chart look familiar to you guys? What chart is this? It looks colorful. I like it. It looks pretty. Look, guys, the one thing to remember about this chart is this is the chart of Bitcoin. And you may be thinking, well, how the hell is this even relevant to what's going on right now? Guys, take a look at this chart. Okay, this 20,000 level in Bitcoin would equate to the market trading at 33.92 not so long ago. Okay, then Bitcoin drops all the way here to 10,000 and then it bounces back to a level of 16, 17,000 right here. Let me show you the side-to-side comparison right here. So basically the top in Bitcoin, the drop, the pop. Look at this chart of S&P that I was just showing you on the prior slide. You got the drop, you got the top, the drop, the pop. This situation right here in Bitcoin, okay, coincides with this situation on the S&P 500 chart right here, guys. Now, you remember what happens next, right? It's not that Bitcoin goes to the moon when everybody tells you so. It's going to 500,000, a million, all this crazy bullshit. Okay, it drops, which we actually predicted. So I can't stress enough how similar these charts are and how circumstances and time frames are similar. It is absolutely insane right here, guys. So with that said, I want to point out a few key divergences which makes us think, and along with the 13 markets move formula, all of these things that point to a bear reversal. It could be happening at any moment. It could be happening today, April 17th. You're looking at your screen, you're like, fuck it, I'm buying calls. And just as you're buying calls, the market is reversing like crazy. So beware of this, because multiple things are pointing to that type of scenario unveiling later on today when the market opens. So bullish VIX divergence, guys. Here's the deal. In the last couple of days, VIX finally breaks the 40 level. Okay, but the question is, if you look through the history, there has not been such a prolonged time where VIX has actually traded above 40 for over a month. Okay, typically VIX spikes, it drops like crazy, it spikes, and pretty much surrenders the gains immediately. This has not been the case here, guys. But what's notable about the last couple of days, this downtrend in the VIX finally breaks 40, hits 37.31. When? when S&P 500 trades roughly at about 27.50. Okay, now, after all these positive announcements, the coronavirus vaccine and so on, okay, S&P 500 actually moves to 28.85. And what does VIX do? Well, VIX actually moves higher along with S&P jumping higher. So it actually goes from 37.31 to 39.25. Now, VIX should be dropping. While the market moves higher, VIX should be dropping. But clearly, this is not what's happening. So VIX could have just set a temporary bottom right here. I'm not saying it will never fall below 37, but for the time being, okay, this could be a TRO, a trend reversal on the VIX actually moving higher. Now, it doesn't mean intraday today, it still cannot visit 37, but based off the price action, VIX should have been dropping like crazy here. We should have already been under 35. But so far pre-market, it's about 5:40 a.m. on the 17th of April. Okay, so far pre-market, we got a divergence on the VIX. Okay, now, market higher, VIX going higher. This is the chart of the S&P. Pretty much this is a same illustration, different chart. Now we're looking at the chart of S&P 500. So basically, when we're right here, okay, VIX was at 37.31. Now the market jumps even higher, and VIX is at 39.25. It should have dropped. The reading on the VIX should have dropped. It should not have gone higher. So guys, this is an easy giveaway right there. Divergence number 2. S&P, all the markets is going higher. Amazon is actually going lower. Well, what the hell is going on here? Amazon has ultimately been the best stock in the market. This is where institutions have been placing millions and millions of freaking dollars. And look what's going on all the great news. Instead of making a new high after hours when all this good news is coming out, look what happens. Amazon actually drops. It drops under the 2400 level. It's testing like 2370, 2380, 2390, right around there. While the market is up 3%, Amazon is down. Hold on. Amazon should be going through the roof. That has been the strongest stock. That is a sign of a top right here. When your strongest stock resists to move higher on what is overall highly positive factors for the market, okay, it tells you that the reversal to the downside is near in the overall market. Divergence number 3, calendar oil divergence, guys, also known as contango. Contango is basically, guys, your spread between your calendar contracts. I'm going to break down the specifics to you in just a second. Let's review the situation with oil real quick. Now look at this chart right here. While everybody was super highly positive on oil, oh, we got a deal. You know how these Trump and deals, you got to learn one thing about Trump and deals. When Trump says deal, you'd better get ready to short the hell of whatever this deal has to do with. Okay, he says deal, you wait for the bounce, you click buy puts, and you celebrate after the day is over because you will make good money doing that. So Trump says deal, we go to 28 bucks on oil after just recently being at 20. Then it bounces, we short it, it drops, it bounces, we short it, it drops, it bounces, we short it, it drops. It continues in this fashion, right? So, but while oil loses 30% of its value in the last few days, okay, S&P typically would drop as well, but not in this case, so it loses the correlation temporarily. We think it's about to recapture this typical correlation that we have seen between oil and the market. Now, you may be thinking, how's that? Didn't oil go up yesterday? Well, on one end, it did, but, okay, hold on, okay, this same chart of Bitcoin is telling us that oil is going to go even lower. Leonardo, stop. What are you going to just use the damn Bitcoin chart from 2017 and 18 to like match it with every chart that you see right now? Well, nice and easy. Can't you like look at something else, guys? I can't be looking at anything else. This similarity is freaking unbelievable. Just look at this. Look at this. Okay, this is the old chart of April 2020. Look at this part right here. It's matching these moves right here perfectly. Just look at it. Okay, and we know what happens next, right? When Bitcoin drops to $64.99, they tell you what? Oh, it's the best deal of your lifetime. It'll It will never ever drop under 6,500 ever again. And a month later, it's trading at 3 grand. Okay, so what I am trying to tell you guys, despite of all this bullish positivity, you would think that oil prices based off the contango spread are actually going higher. Well, we see that exactly what happened to Bitcoin when nobody thought it could go any lower under 6,500 at that point in the time frame in the past. Okay, it did get slashed by another 50% from here and dropped to 3,300. So we're thinking oil could drop by another, okay, 30 to 50% from here, because the chart's resemblance is astounding. So here's what we got going on positive news. Okay, the CL contract, the oil contract for June, initially spikes higher right here, as you can see, to over 26 bucks, and then it drops to 25.50 pre-market. So things are so good. Why is June contract dropping? June contract on oil should be going through the roof. Okay, but what we're noticing, the contango, guys, contango is the spread between, you know, the future contract for oil in relation to the closest date that's currently trading, which would be the May contract. As you can see, May contract for oil, May 2020, it's down pre-market. It's trading in the 18 handle. Guys, $18 oil is where the price for the May contract is right now. Okay, and nobody is even talking about it. I'm sure they will be talking about it at some point today. Okay, but by that point, we may be at 17. Guys, this is some wild moves in oil, and I know the market has not responded yet, but it will, because this contract right here, the spread, as you can see, between 25 and 18, it's 7 bucks. Yeah, it clearly tells us that, yeah, everybody is certain that oil prices will move higher by June and afterwards. Otherwise, we wouldn't see such huge spread, this contango difference between these things. But if you look at the data prior, okay, we actually had a bigger spreads before. So in a way, despite of the good news, this spread is actually not increasing, and based off the pre-market action, it is decreasing. So guys, this is not good news for oil. Basically, the market participants are rethinking whether June is gonna be the month where oil prices are really gonna rocket higher. I think the market is really showing us a divergence here, pointing to the fact that oil is not going to rebound within that time frame, and if oil doesn't, we could see, based off the Bitcoin chart laid over the oil chart at present time, that oil could drop to 15, 16 bucks, possibly 13, before oil prices start moving higher. Now, gold versus SPX divergence. Okay, what do these charts have in common? Let me show you a couple of quick charts. I wish I had time to show you more, but boom. I've actually shared this information with you guys probably a couple of weeks ago before this breakout happened. We said, look, there's the reverse head and shoulders, and sometimes they resolve into a breakout higher. So that's the case with Amazon. There's another chart I showed you in the same video. This was this chart right here. It was the chart of gold. We basically said, look, Amazon and gold, they have exact identical chart. Here's your reverse head and shoulder, which is bullish. Here's the breakout. Now notice, if I rewind this just a little bit, okay, look at Amazon, okay. I already pointed the divergence, okay, between the strongest stock and the S&P. Why S&P is moving higher, or the better question is, while S&P is moving higher, why is Amazon beginning to drop, okay? And the answer is right here in the gold chart. They've had similar pattern, almost identical points of breakout from that head and reverse head and shoulder formation, but gold has been dropping. It's been creating a couple of red candles here back to back. More importantly, the bearish reversal candles. So we could see gold drop maybe back to 1675, 1650 level. Now, this chart right here shows us exactly what S&P 500 is actually about to do, because they've been so highly correlated, okay? But gold is sort of preceding the moves. It's showing us the moves before the S&P is actually making the move. So what we're about to see is if Amazon is reversing, we could easily see a big day of reversal in Amazon. Now, it's not excluded that it could first pop and then drop, but target that pop in Amazon, because the drop, just like we've seen the drop yesterday, $108 drop within 5 minutes, guys, okay? You're a day trader. You want to take advantage of opportunities like this. So in this chart of gold is actually pointing to us that there's a crazy move, crazy reversal that's in the making here, not just in the Amazon, because Amazon is such a great component of the indexes. If Amazon drops, it's going to be very difficult, okay, for the indexes overall to move higher. So including what we've shown you last few videos, all the data from the financials, yes, they're popping slightly after the good news yesterday, but overall, the predominant behavior in financials is to drop after earnings. More financials are going to announce earnings. More bounces that are happening on light volume like this, they are going to be reversed. So if financials and some of the FANG stocks begin to drop, clearly you got a recipe for the S&P 500 index to drop as well, and the markets overall as well. So what do these charts have in common, guys? The answer is failed breakout that resembles the chart of the Bitcoin. Done. USD versus S&P divergence. Guys, dollar. I'm going to point one time frame on the dollar chart that's got very strong correlation with what the market was doing. March 9th, okay, through March 20th, roughly right here. You see this huge move in dollar from 94 all the way to 104. Huge, huge move. Now, even if you're brand new, you should know what was happening throughout this time frame. This is where we set the low. The low on the S&P 500 when it was trading down to 2174 was set when the oil, when USD chart was right here. When dollar was stopping, okay, that's when we set the low in the S&P index. So after that, we start working the way higher a little bit, okay? At this point, the chart of dollar, guys, after setting this double bottom formation above the blue line, basically small undershoot each time, but it bounced out, it's likely to go back to the 104 level and revisit that. Now, we already know what happens to the S&P 500 index when dollar does this, especially when it does this in an uninterrupted pattern. And it looks like we got a beginning of this TRO in US dollar climbing higher. So considering, okay, that the dollar can go back to the 104 in one uninterrupted pattern again, okay, we're not necessarily expecting the S&P to drop to 2174, but we could easily see that 2450 within the next 7 to 10 days. I know this is quite crazy considering that right now, pre-market, we're trading close to the 2900. So this could be a phenomenal reversal, guys. And on top of everything, our 5-day sequence in 30 market smooth formula, 7, 12, 7, 3, 11, okay? This shows you the beginning of the TRO. The moves have been rather condensed and contained within the tight trading range, but nonetheless, the patterns are there that are pointing that the bear reversal is near. Especially, it is important to pay attention to that when the market is hitting some strong resistance levels, and we are there. 2884, 2885, guys, on S&P. That's your level. If you'd like to learn more how to utilize the 13 markets move formula data, click the link below, guys. Also, don't forget, okay, that overall, the next 72 hours to 96 time frame chart, if you were to pull, let's say, a 5-day, 15-minute chart on your trading software, the market is going to look like this as far as the pattern. Now, with that said, take advantage of this. Record your trading video, guys. Don't forget to submit your videos for the weekly trading contest to win one of our high-priced but highly undervalued courses out there, guys. If you want to evolve into the best trader you can be, click the link below, fill out your information, enroll in the contest, schedule a call if you have any questions about anything related to trading. Let's roll. I'll catch you on the next trade soon. Let's trade.